This is not just a tutorial, this is a complete guide for beginners who do not want to waste 8 years on mistakes. We will show you how you can learn to earn money right now. My name is Golden, and I have been in this industry for over 8 years. Just last month, I made $300,000 on the Forex market. This material is time-tested and does not contain quick schemes, but provides real trading skills. In 40 minutes, the complete system will be shown, starting with the basics so you can start earning right away. Basic principles of technical analysis, support and resistance levels. As we know, markets always move in some direction. This can be a long-term direction, like this. That is, the market is constantly growing, and this can be a short direction. That is, the market moves in this way. Speaking directly in terms of support levels, these are the levels that are created in these locations. Why exactly in these places? These are the places where buyers and sellers met. That is, buyers bought, sellers sold. The market at the moment did not know where to go. Accordingly, liquidity was created here, which in the future can serve as fuel for the continuation of the narrative. So to continue the trend that is present on the asset. Similarly, in the shorts version, we had a short trend, buyers buying at the moment, where the market has already decided whether it will fall further or whether it will start a new trend. That is why we also create volumes here. Now let's talk about what candle patterns are. To begin with, let's understand in general what a candle is on a chart. As you know, candles can be different, and it all depends on the time frame. Let's take for example that this is a 15-minute time frame. We have the body of the 15-minute candle and its shadows. This is how it will look on the graph. Let's first understand what the body of the candle is. The body is the place of its opening, so open, and the place of its closure, which is close. Let's mark it like this. From this, a 15-minute candle is formed directly. What is formed in the immediate shadow of the candle? Shadows of candles are formed at the time of trading precisely in the interval of 15 minutes while it is formed. That is, these are peak values, peak and minimum values, to which the price reached but did not close there, because we clearly have an opening level and a closing level right here. Shadows only signal that some volume was manifested at the moment, but it was not significant, and the price could not be fixed at this point. This is what directly concerns the candle. Now let's talk about candle patterns. How to focus on them in general. Let's start by talking about the absorption pattern. The absorption pattern is when we imagine that we have, for example, a short trend. The price is moving in the short direction. And here we will have the last short candle in this format. Let's choose the color red. Here in this format we will have the last short candle. What is an absorption pattern? An absorption pattern is when the price moves in a short direction, but the next candle after the red one is green, which is bullish. In other words, you can still say long, and this long candle should be larger in body than the previous red one, as in this example. This signals the absorption of the short candle. What does it do for us and how can we use it? When we see such a pattern, we can understand that the market trend is changing. And if before that we worked in the short direction, then from the moment of formation of this model, we can already focus on long directions to the nearest zone of resistance. That is, as in this place. Here is a great example of, let's say, a long position on this model. What other candle patterns are there on the chart? In the next model, I will show you one that actually works for me every day, and I use it for myself in trading. This is a pattern flag. How is it created? This pattern is created, for example, for a long format, when our market is constantly growing, after which it goes into downward consolidation. That is, this consolidation is not significant, but still it does not continue our long trend at the moment. Then we mark the resistance and support levels. In this movement, and we are waiting for the price to exit the consolidation, when we have a candlestick pattern formed in the following way, that is, we have a characteristic breakthrough of the resistance level, we can implement a position to continue the long movement. This is how the pattern flag looks in the long direction. Let's demonstrate the same for shorts. We have a short movement where the price enters a small consolidation and begins to grow. We emphasize the level of resistance to ourselves. It is a level where the price at the moment could not continue the trend, and a support level that holds back the price as well for that, so that it goes against our trend, after which we need to wait for a characteristic breakthrough of the resistance level, retesting and entering the trend continuation position. This is how a pattern flag looks like. This is something you can use in trading literally every day. Let's talk to you about the dodgy candle pattern. What is it? It will look like this. This is a candle that has a small body and big shadows. Let's imagine that we work with you in the shorts trend. Let's mark it. That is, our market is constantly declining, and here we have a dodgy candle. This candle signals us that at the moment we had a rather aggressive short approach. That is, short volumes prevailed on the market. However, at the last moment, during the closing of this candle, our situation has changed dramatically. So significant long volumes entered the market. Buyers began to buy back the price. And thus we have a candle with a small body and large candles. This pattern is a reversal, and this candle signals to us a further reversal of the market. When we see such a pattern on the graph, we can already rely on the fact that we will have a long-term movement. Again, I want to emphasize a special detail for each of these models. They do not work in isolation. You can't just take it as a pattern. This should be considered in the concept of price action, which is to take into account the general picture of the general market, in which trend it moves, in what area it is now, what is our time in the market now. Is it the London session? Is it the New York session? Is it even trading outside liquid sessions? I will talk about all this in more detail later. Now let's talk about another important detail. These are the volumes, how to analyze them, and how they directly affect the market. What are these volumes anyway? Volume is what underpins price action. That is, if we see long shipping, then from below we will see such sticks, which will signal to us the power of this delivery. That is, if it was strong in this long move, that is, one candle expanded quite significantly, means that the voluminous candle will be quite large, which will signal that this movement was not manipulative and really supported by volumes. However, what is important to know about volumes? In each broker, in each exchange, volumes are formed on the basis of a stack of orders. What is it? This is a glass where we have buyers and sellers. That is, buy, for example, and sell. Our price is now at the level, for example, 100. We look at the glass of orders and see what, for example, we have in common in a glass. Total amount on buy now is $1,000, and in the glass for sell, that is, the players want to sell for $7,000, for example. That is, they want to buy only for $1,000 and sell for $7,000. The market analyzes and puts it into the price. Accordingly, he understands that there are currently more sellers and begins to move downward due to this, to the nearest, for example, some reference area, or to some level of support. That's right. However, why doesn't it work? Ahead, these orders in the glass can be adjusted. That is, they are usually set as limited. The player issues, for example, a warrant for $10,000, which may even be unrealized. However, people who analyze volumes already put it in their price action. That is, in your analysis, are already starting to take this into account, although this volume may not even enter the market. And very often this is where inexperienced players come across. That is, they are included in their analysis. It doesn't work. Everything. Volumes don't work for them. This is not true. Now I will tell you how to correctly analyze volumes to make it really work for you. The first thing you should pay attention to is that is, you will not even need this indicator. Is this glass? Everything you need, it is quite simple to explain. For example, the market moves in a long trend. Here in this format. First of all, if we want to enter a position for the continuation of the trend, that is, in this case, long, What should we pay attention to? The first is the formation of candles. Long candlesticks should be large, that is, the long movement should be carried out in this format and not in this one. This is the first sign that our trend is quite strong, and we can work on it. The second sign is the reaction of the price to the nearest support areas, to some inefficiencies or the same support levels as at the moment. That is, we had long-term growth, a small pullback, an instant reaction, and continuation of long-term growth. This means as long as this flow of orders continues, that is, this long-term delivery continues, we can calmly work in the same direction. If we see a similar pattern, where we have a fairly aggressive delivery as well, in the long direction, however, the market makes significant setbacks. This is already a signal that the trend is not strong. That is, it is still relevant on the market, but here we have to take into account the depth of pullbacks. I mean, do not rely on the first support zones, but wait for a complete rebalancing of the latest movements and then implement the positions. It will always depend on the trend. As I said before, how to identify it. Strong characteristic candles in one direction. They should be quite large, expand quite quickly, and respond to the very first support areas. So, not like this or this one. This is how I use my volumes to trade. How I recommend you use them. Another important factor that I rely on when analyzing the graph. This is the mood of the crowd. What does this mean? A great example of this would be to even dissect the recent Bitcoin movement that is happening right now. So this crypto coin is constantly in a long movement. That is, it is constantly growing. Accordingly, people who trade this coin have a positive attitude. That is, they expect constant growth and do not expect a short movement. This is in our favor. That is, we perfectly understand that if everyone wants to buy an asset at the moment, then most likely you need to do the opposite. You should always go against the crowd in the market, which is against the obvious things. After all, we do not forget that we trade directly against the market maker, people, companies, banks, financial institutions that make money on us. That is, we should think more like them. Accordingly, if here at this moment, when we have such a characteristic one-sided growth, we can't start buying already, we need to wait for a counter movement, because a counter movement will be more likely and will bring us significantly more profit in potential than the continuation of this trend. After all, the asset is already overbought. It already looks too expensive, so we need to wait for optimal values. And in the meantime, we will wait for optimal values to continue the trend. We can play against it, here in this format. That's all the fact you need to know about crowd sentiment. That is, when all the people are in the mood to buy, you should think, are you sure you want to buy? Most likely not. You want to sell because it will give you more opportunities to trade. Well, now the schedule has opened before us. Let's quickly go over the functionality of the platform in general. What do we have here? On the top left, you can see the currency pair. Here, you can choose any currency pair by activating the Forex filter, i.e. any euro, any pound, any Canadian dollar. Absolutely any. Let's take your USA as an example. Next, we have the timeframes tab. These are time slots. Let me explain in more detail because this is an important point. For example, if we take a 5-minute time frame, what does this mean? This means that each candle is a 5-minute. That is, it consists of the 5-minute candles. One 5-minute consists of 5 minutes. If you take a 15-minute candle, for example, it consists of 3 and up to 5-minute candles. That is, from the beginning of its opening until the moment of closing. Exactly 15 minutes pass. That's basically all you need to know. Regarding what time frames to use for a newbie, I recommend not using time frames shorter than 5 minutes. Why? Because there is too much noise on the graph, too many candles, and it is difficult to navigate. Okay, let's take for example a 15-minute time frame. And let's collect all the information I talked about earlier in some kind of puzzle, if you start with support levels at all. Right, here in this case, we had a long movement. We had support levels forming. That is, here, where there was a manifestation of counter interest. Here we formed certain, even I will mark with zones to make it more clear, certain price support zones. In this place. These zones supported long context. This is how we see here in more detail on an example. The price moved in a long trend, then made a pullback, found support in this area, and continued its movement. Then it made a pullback again, found support, and continued its long movement. Speaking of when the support levels are broken, as in this location, yes. What can this signal to us? Or even better, it will be taken, because this example is not yet formed. Let's take this example, that is, the last low of this range. As you can see, this level of support did not send the price higher. That is, it failed, did not work. However, we do not finish our work with it, because now we can use it as an inversion. So it had to maintain long positions when approaching him at this moment. However, it failed and is now a support level for short positions. So, when the price comes to this area, it will receive a reaction and continue the short trend. This is how it will be possible to work with it. Specifically, let's break down the short-term support and resistance levels so that it was more general, more visual, and understandable to you. Yes, let's find some distant example. Let's say, even here. Yes, we have these structural zones. For instance, even here. Yes, we have these structural zones. For example, here we were forming this long movement where we had consolidation. For example, this zone will act as a support level for short positions. We had a short trend, a short movement, a pullback, a short movement, a pullback. As you can see, this pullback comes to the support level, that is, to the zone of the last high of this movement, from where it already receives resistance and continues to fall. Basically, this is all you need to understand about support and resistance levels. I will talk about this in more detail when opening positions. It will be more clear to practice it all there. Let's touch on an important topic, the absorption of candles. Here, in this case, we didn't have to look for a long time because these patterns happen all the time. If we take this example, we have a strong shorting movement, meaning the price is falling. However, at the moment, we have the following. Pay attention here. Here we have a minor red candle, which is then absorbed by the next green one. That is, look at this green candle and this short one. What does this signal to us? What does this signal to us? Let's talk about the fact that our trend is changing. That is, we had a short trend, a takeover. That is, we had a small red one and a big green one. Accordingly, this is a signal that the trend will reverse. In the short term or in the long term, it is already very individual and everything depends on the general logic. But at this moment, it is a clear signal that you can open long positions. Let's talk about volumes, which is just as important, right? And how to use them. Let me remind you, volumes are an aggressive one-way delivery of an asset. That is, when it literally rests on the very first pullback zones and continues its movement quite impulsively and aggressively. Let's take some examples to make it clear. I think it will be even better visible in 5 minutes. That's how it is in this case, long movement in this place. Yes, here it has its birthplace and this is what he led us to. As you can see, at this moment the price was growing very aggressively, which signaled us about significant volumes on the market. It did not even make any significant setbacks, literally 1 or 2 red candles, and again, continuation of the long movement. What did it tell us? This told us that we can continue to implement positions virtually from anywhere in the longitudinal direction. Yes, this is the nature of volumes. It's how you can look at it and how you can understand it. Pay attention, which is no less important, when we already started receiving such significant protracted returns. That is, we did not have any one-sided clear direction, no aggression on the part of the price. This was already the first sign of that the long movement is already ending and it is no longer relevant to take positions on this asset. It will be more relevant to wait for a reversal from this place, where we have already turned around, and also in an aggressive format. Many red candles, 2 minor green ones, red candles again, and so on. That is, this is how you should adapt to the market and navigate. When you see impulsiveness, it is a sign that the trend is strong and can be entered for continuation. As for the logic of how I use it in real time, I will show you more details directly on the deals, so let's get to them. Well, let's go directly to the trade. To begin with, we need to open a trading platform. I use the PocketOption platform. You can find the link in the description under the video or in my Telegram group. What do we see when we get to the platform? We see a linear graph. The first thing we need to do is change it to a candle. After all, we analyze and focus directly on candles. This is where you can do it. This is how it all changes and looks. What else should I set up before trading? These are time frames. Where can you find them? Likewise here, by clicking on the three dots, the time frame tab, we select. For example, today we will work with you with a 5-minute time frame. I choose it. Done. Also, we have more drawing tools available here. It can be some lines and rectangles. And the Indicators tab, where more than 30 indicators are collected, from which you will come to this later. Now, we don't need it for today. Okay. Topping up your balance. Having money in your account, you can start trading directly. If you still don't have a balance, but you just want to test how the platform works, for that you can click here and go to the Demo tab. A demo account will be opened for you. Everything can be adjusted here as well, as I showed in the previous stage. You will have $50,000 here. You can open trades here, test your trading strategies. That is, a great tool for not only learning, but just practicing with some new moments, new tools. Well, let's go directly to the real account and open positions according to the logic I described. I will analyze the chart on TradingView, so here it is. And I will directly open a position on the platform. Let's start with the analysis. Yes, here is the USD chart, 5-minute time frame, what we are seeing at the moment in front of us. We see strong long-term growth ahead of us, which is coming to where? That's right, to the resistance level. This level is here. Well, you can mark it with a zone. That is, it's all schematic, but the price has already come here. What does this mean? This means that there is a possibility of short positions. Let's go to the platform, open the USD pair. We choose a time. I will enter for 4 minutes. And choose the amount of the deal. I usually risk 5% of my deposit. Press the sell button, and the order is activated. We can switch to the 1-minute time frame to more clearly understand how it all works now in real time. If we return directly to the analysis, why did I decide to sell? Firstly, because it's the impulsiveness of the long delivery. What did it come from? It was formed directly on the implementation of the news. At the moment, we have significant economic news on the dollar sector, which in principle predicted this long-term growth of the euro asset. However, an asset cannot grow unilaterally and must always find returns. As I understood that the pullback should take place at this very moment, we came to this area. This is an area of resistance. So this is the area from where the price last continued its short movement. Accordingly, on the reaction and interaction with this area, I expect to see a short movement, at least somewhere around these values to balance this candle. If you look at the 15-minute time frame, so is the context of the 15-minute time frame. We see mostly lateral movement here. That is, we work according to the ping-pong system from the nearest support areas to the nearest support areas, as in this case, from this level to this level. And now from this level, we will either already work with it, or we will still continue the long movement. Here we will see now how the position will end. Let's talk directly about why the expiration time. We have 4 minutes, because I count on a first priority reaction from the region. That is, it will not be some protracted corrective movement. It will be exactly that. It should be a quick reaction in the short direction for rebalancing. Okay, the position is not moving in our direction at the moment. However, this is a rather aggressive format I showed you, therefore nothing complicated. At the same time, mistakes also happen, and they will happen quite often. The throughput of my signals is there, and my positions are about 85%, 84%, all depending on market trends, from how the market moves. However, you understand that this is also quite a lot of misses, for example, by 1,000 positions. That could be 140 losing trades, but there is nowhere without them. This is practice, this is experience, and this is what we get by trading these markets. Okay, let's see what about our position. 1 minute, 20 seconds left. Maybe we should turn it on. I mean the 15 seconds of the time frame, so that it is better understood in general how everything is happening here. More clearly visible. We grow with such jerky movements, which signals to us about the clear advantage of long movement, and most likely, the lack of reaction to this area of resistance at this moment. However, let's not be upset. This position can easily be covered by the next one. Okay, 40 seconds left. Here we see the first manifestation of the short reaction. However, it will rather fill this gap and perhaps continue the movement. I want to wait for the end to understand. Has our resistance zone worked at this point, and whether the asset is ready to continue the short movement? For me, this area is still a relevant goal, about which I will tell you a little later, on which I, in principle, oriented myself in this position. So, what's our deal? 15 seconds left. Will we have enough time? Not enough, as you think. Let's see. There is contact with the entry level, but most likely there will not be enough time. Then I will wait for a slight rise and enter again in the short direction. Well, 2 points. Let's try to extend this deal. After all, the plan is still relevant. We still have a reaction to this level of resistance. We have something to go below, so I think it's okay that the first deal will be closed with -1 point. Such a thing also happens. These are, so to speak, features of time trading. So you may be right in the context of the movement. You can clearly analyze where the price will go, but you might just get the execution time wrong. That is, yes, I am here for 5 minutes to fulfill the agreement. I would have already made my profit. Well, it's fine. It's work, and we work here. You should also not forget about risk management. No need to rush, no need to take excessive risks, for example, to increase your small deposit during the week or during 3-2 days. Some people even try to do it in 1 day. Believe me, this is a path to nowhere. It is better to move systematically by 5%, 10% every day, every week. And so, given the compound interest, so what is a compound interest? I'll give you another trailer. So you start with $1,000, right? Earned $100 on the first day. Furthermore, the very next day you get $1,100. Already from $1,100, 10%. That's where you earned $110. And thus, growing. Your balance can, believe me, grow very quickly, even to tens and hundreds of thousands of dollars. However, you must always be disciplined. Always follow the rules you set for yourselves. Me, for example, when I copy trade for my team, that is, where people will automatically copy signals without pressing anything with my hands, I have clear rules. For example, take profit, $4,000, stop loss, $3,500. If I understand that the market is not going today and it is unfavorable for me, no fear of ending the day at a loss. Believe me, there are opportunities in the market every day, so you should not rush to do it. What about the deal? As you can see, here we have that short movement, which I pledged when entering the position right here. Working great for now. The resistance zone showed itself just fine. Sorry, resistance zone, the support zone in the short direction, showed itself just great. Well, we have to wait and see how this position ends. Here we still have 1 minute and 40 seconds. This, let me remind you, is a 15-second time frame, so you don't get scared. Why are there so many candles? Let's see what it will bring us. If you even look at the 15-second time frame, to understand why a short movement should have taken place in this place, although I very rarely analyze 15-second time frame, but in general logic, it will apply to all time frames. When you see these price gaps, so where at a certain price value there is no candle or body at all, this means that some kind of splash happened here. That is, there was some inefficiency here. The market simply skipped this area, and this is potentially always an interesting area for the market. It always tries to return to it and fill it. It would be a movement with filling and continuation. Or as it is currently being demonstrated, this is the next question. However, to know that it is always a powerful magnet for price, and you can lean on it. So we had it in this place, and it was filling up with us. We had it in this place, and it was filling up with us. So this is what you should also take into account in your trading. However, I advise again, for beginners, please take into account such moments when they are formed on 5-minute, 15-minute candles. That is, not in seconds for sure. With experience, you will be able to analyze such time frames. Yes, the position works great. 15 seconds to go. I still want to say something. Well, let's wait for the completion. Then I will tell you what signaled even now at this moment that this position will be worked out. This is what I was talking about a little earlier. This is our absorption pattern. And now I will show it to you. Well, we have the second deal in plus, 1 minus, 1 plus. Great result. I'm just showing how it works. If you go back to the trading view in the EUR/USD chart, as you can see, we have formed an absorption pattern at this point. That is, we had this last lung candle, and then it was absorbed by a powerful short candle, which signals us about further short movement in this area. However, we have to wait for a small pullback, that is, at least to this inversion level, which is the last one. Supported long movement. When interacting with this level, I would enter a repeated position in the short direction. Will it happen or not? It is not clear at the moment. Let's not dwell on it. Let's take a look at some more assets so that you just understand that you don't need to get so fixated on one asset. You can analyze multiple assets and still be fine. Let's open USD CAD as an example. What do we see here? Here we see a step towards consolidation. However, what does this candle tell us? This is a dodgy formation candle. That is, a small body, a large shadow. This means that the price tried to sell, but nothing came of it. Therefore, you can open a position here. Let's go to the platform, type USD, CAD in the search, select it. The profit is 58%, but for schematics, for example, it will work for us. Let's open this diagram. We open a position for 4 minutes in the long direction. Let's go. Also, just as importantly, since this video is educational, I can afford it, but you should consider it. When looking at the assets on the platform and analyzing them, do not open positions, at least initially, on assets with a return of less than 72%, 75%, 76%. So, anything less than 73% is no longer a very profitable position. That is, you lose too much, and then it is too difficult to get back. Therefore, always focus on high profit assets. Try to analyze pairs that have a return of 80 plus, because this will later affect your balance sheet and significantly accelerate your career growth in this industry. In this case, for example, I was able to afford to open at 58% return. Also, I can do this at a moment when I am absolutely sure of the position. Yes, while this deal is working, let's go back to TradingView. Yes, here we have the dodgy pattern. Let's mark it. And here we are practicing. Okay, let's turn it on. Let it be in the background for practice, and I'll tell you a little more about how it all can work for you in general. Look, I have created my own Telegram group for you, where I hold open trading sessions every day. It is absolutely free. You can join the trading group and trade with me. I analyze the market in real time and issue positions that I accept personally. Again, let me remind you that the percentage of passability of my signals is about 84%. Moreover, I have been on this market for a long time, and there may not be many positions. There can be only 5 and up to 6 per day. However, they have a pretty good profit. So if you find it difficult to analyze on your own in the first stages and you still don't fully understand how it works, you can join me in the Telegram channel, where I will fully guide you step by step and bring you to the result. Okay, as we can see, our position is working great. What do we have on the TradingView chart? Let's switch, for example, to the 1 hour one, so that you can grasp the bigger picture and understand in general what to focus on. First, we had a dodger candle on the 15-minute time frame. That is, a small body, a large shadow, which at the moment, that is, in this candle, the sellers tried to sell. However, we met a strong contender, which turned the market around as a result, and the market continued to grow. Looking at the 1 hour time frame, we have a long trend here on the hourly time frame. That is, we also went in for training, which is definitely an advantage. If we talk about the 5-minute time frame, we had a consolidation, rather protracted, after which we got a dodger candle in this place, which also at one time withdrew liquidity from these minimums as fuel for further growth and came out through the absorption pattern again. This is the third situation with this pattern. Here we go through the absorption pattern, and we start our long movement. Looks great and pretty simple, doesn't it? So what's the deal? 14 seconds. Let's wait for the result to come up. Well, our deal closed in profit. As you can see, a simple concept, quite easy to work with and quite effective, as practice shows. Well, as you can see, due to simple tools, support and resistance levels, absorption patterns, candlestick patterns, volumes, and generally trends in the market, you can analyze this market yourself and take some open positions. As well, the logic is quite clear and understandable. I show all this in real time, without any falsifications. That is, we saw the moments, we realized them in ourselves on the account. This is how it's worked for me for over 8 years. This is what I've spent 8 years doing, now packed into this 40-minute video format. What should be understood? If you watch this video carefully, note down certain aspects, and do some testing, you will understand how to do it yourself. Such opportunities on the market. Opportunities in the market occur every day, and there are quite a lot of them. If you can correctly identify these situations for yourself, you will 100% earn from it. But it is important to understand that trading is not a game of chance. So if you're doing what I've shown and it's not working for you, then you're doing it wrong. Because it works for me, it should work for you. Therefore, you need to re-watch the video, record everything in more detail for yourself, maybe test it on a demo balance. Fortunately, we have such a possibility. And then go into battle with a real deposit and achieve your financial goals. And also on my YouTube channel, there is a large collection of educational materials where you also from A to Z, with a complete analysis of each concept, you can read and come to a certain result. This video is as simple as possible. In the future, we will delve into a more precise analysis in specific time frames and how to make money from it. To open there not 1 or 2 deals during the day, but for example, 6 and up to 8 deals, and they all had a high probability of working out. Well, let's summarize. If you enjoyed this guide, please like and subscribe to the channel. There will be even more useful content on trading here. Join our club. There you will receive our daily signals and can ask a question to an experienced trader. Don't waste years on mistakes. Act now. See you within the community.